And welcome back. It's Jason Walter here, and thank you so much for joining me in today's video. I'm really excited to share this video with you guys because there's been some interesting dynamics happening right now in our US housing market. And actually, this is my favorite video I make every single week for you guys because this is based on my own analysis of Realtor.com's data here. So they actually just posted their latest housing market update on their website on February 2nd here. But just like my previous videos, I didn't even read it because, of course, I'm a nerd. So instead, go to right here, data, which is realtor.com/research/data. I mean, you know you're a nerd when you're excited to share this right here with you guys because look at this. This is an Excel spreadsheet, basically data I pulled from realtor.com's website right here. So in today's video, I'm going to talk about asking prices, housing inventory, new listings, days in the market, as well as price reductions in the US. I'm also going to share a summary in today's video and also some predictions as well. But I'm also going to compare how this last week compares to years past, going back to 2018. So with that said, let's go ahead and dive right in. But first, a friendly reminder, if you guys are looking for a real estate agent referral, whether you're looking to buy or sell a house in virtually any parts of the whole United States, then check out that link below, which is homeandmoney.com/Jason to get started today. So let's have a look at what's happening right now. So the most recent week we have from Realtor.com is for the week ended January 28th this year. Let's talk about asking prices. Look at this. Interesting trend we're seeing right here because asking prices compared to 1 year ago are in the single digits for the past 8 weeks in a row. So single digit gains in asking prices nationwide for 8 consecutive weeks. And as a note right here, every single week this year, we've seen single digit gains of asking prices nationwide. Every single week, we've seen single digit increases nationwide. Also, for comparison's sake, there was only 4 weeks in the entire year of 2022 in which you saw single digit increases of asking prices. So 4 weeks for the entire year, which is these 4 weeks right here, saw single digit increases compared to 1 year ago. So now, of course, this is much different compared to the rest of the year for 2022, because for the entire year of 2022, excluding the last 4 weeks, we actually saw double-digit increases of asking prices for the entire year. Let's also have a look at housing inventory in the US. Because look at this gain, 70.8% compared to the same week 1 year ago, an increase of almost 71% more houses for sale in the US compared to 12 months ago. And this is by far the biggest year-over-year increase in at least the last year. And by the way, last week was the previous record high for the last 12 months, a gain of 69.4%. This last week, though, increasing by 70.8%. And by the way, this gain of almost 71% is on par with what AltosResearch.com is reporting, because they're reporting a gain of 71% as well compared to 12 months ago. Now, something I do want to mention, because this kind of get a little confusing when talking about year-over-year changes and also weekly changes. The best way kind of really to share that with you is right here. So here's inventory levels according to AltosResearch.com. So according to them, there's approximately 465,000 houses for sale in the US. 1 year ago, there's approximately 272,000. That's approximately a 71% increase compared to 1 year ago. As you can see right here, the gain of almost 71% is the biggest year-over-year increase in at least the last year. So on a year-over-year basis, the difference between 12 months ago and now has been widening a little bit. But look at this though, because inventory levels have been more or less decreasing ever since really mid-November last year. So for example, on November 18th, there was approximately 568,000 houses for sale. Now there's only 465,000. And also at 465,000, this is actually the lowest levels since June 24th last year. So in other words, to recap here, on a year-over-year basis, the difference between 2022 and this year has been widening just a little bit. But when you're looking at trends on a weekly basis here, inventory levels have actually been decreasing ever since mid-November of this year, last year I should say. One way to kind of explain this is that look at 2021, because inventory levels really peaked on September 3rd, 2021. And then more or less decrease for the remainder of the winter months. Whereas this last year, back in 2022, inventory levels actually peaked in late October last year and then fell thereafter. So the peak was actually a little bit earlier in 2021 versus this year. And because that peak happened later in 2022, that could be one reason why we're seeing bigger increase of inventory levels compared to 12 months ago. And going back to Realty.com's data here, again, a 71% increase on a year-over-year basis. It's interesting to see here that these gains on a year-over-year basis is despite the fact we've been seeing fewer new listings for the past 30 weeks in a row. In other words, on a year-over-year basis, housing inventory has been increasing in 18 out of the last 20 weeks, despite the fact that new listings have been decreasing on a yearly basis for the past 30 weeks in a row. And here's exactly what I mean by that, because here's new listings, this column right here. New listings have been decreasing for the past 30 weeks in a row, going all the way back until July 9th last year. Fewer new listings hitting the market compared to the same week 1 year ago. Now, here's an interesting new trend though, because look at this, October 1st, through the end of November, we saw double-digit decreases compared to 12 months ago. Look at this though, for the past 4 weeks in a row, we actually saw single-digit decreases compared to the same time frame in 2022. Therefore, as a note right here, the gap between last year and this year has actually been narrowing. Again, we had double-digit decreases from October through the end of November, but for the past 4 weeks, only single-digit decreases compared to 1 year ago. So the gap between this year and 2022 has actually been narrowing. Therefore, could we be seeing an increase of new listings on a year-over-year basis soon? If so, that could imply that new listings have been increasing, which of course would increase housing inventory further, causing further downward pressure on home prices. In my personal opinion, what's going to be very telling is the next coming months. I would say probably next 1 to 2 months, because we generally see an increase of new listings during this time frame. If we continue to see decreases of new listings compared to 12 months ago, though, inventory levels will remain subdued, which of course will put upward pressure on home prices. Of course, time will tell, and I'll definitely keep you posted with the latest developments and also my nerdy spreadsheets. So let's also talk about days in the market. So days in the market is at, or actually the increase of days in the market is at 17 days, meaning it's taking approximately 17 days longer to sell a house compared to 12 months ago. So it's taking nearly, or actually a little bit over 2 weeks longer to sell a house compared to the same time frame in 2022. And on top of that, houses are selling slower compared to last year for the past 27 weeks in a row. Additionally, this 17-day increase is the biggest year-over-year increase in at least 1 year. One more thing I do want to mention regarding days in the market is that this is night and day difference compared to February all the way until more or less the beginning of April last year. Because during that time frame, houses were selling approximately 2 weeks to 3 weeks faster compared to 2021. So houses selling much faster in early 2022, whereas this year exactly the opposite, selling 17 days slower compared to 12 months ago. Now here's another interesting trend we're seeing right now as well, because the number of reduced price listings nationwide increased 157.2% last week. This means we've been seeing triple-digit gains for 11 out of the last 13 weeks in the US. Now here's exactly what I mean by that, because triple-digit gains we've been seeing for 11 out of the last 13 weeks. The only weeks we saw gains of less than triple-digit gains were actually for the week ended November 26th, as well as the week ended December 31st last year. And again, compared to the first half of this year, entirely different. From February 5th all the way until more or less, March 26th, we actually saw decreases in the number of reduced price listings, whereas this year, entirely different, up by triple digits. So that's the latest trends we have regarding the number of reduced price listings. We also want to share regarding the share of reduced price listings, for the lack of a better word. So according to altosresearch.com, the share of price reductions for the week ended January 27th this year was only 34%. Back in mid-November, the share was 43%. This means the share of price reductions in the US has decreased approximately 9 percentage points over the last 2.5 months. Probably the best way to share this information with you guys is to have a look at this. The share of price drops, according to altosresearch.com, is at 34% right now and has been decreasing since mid-November this year. Also right now at 34%, this is the lowest levels since approximately July 22nd last year. Now, having said that, we're still at very high levels though, because the current levels right now, again at approximately 34%, is much higher compared to 12 months ago at more or less 20%, and 2 years ago at 20% as well. And pre-COVID, back in February 2020, the share was about 25%. I also want to discuss how this last week compares to years past, going back to 2018. And again, like I mentioned every single week for you guys, I wish I could share 2017, 2016, and before that, but Realtor.com's data only goes back to July of 2017. But at least I can share 2019 and 2018, which is obviously pre-COVID levels. Actually, January 25th, 2020 is obviously pre-COVID as well. Our housing market wasn't really impacted by COVID until approximately March and April last year, or not last year, 2020. So have a look at this. Asking prices, of course, increased by double digits in 2021 and 2022. And of course, housing supply absolutely decreased big time because we had a big increase of housing demand. Back in 2018 and 2019, though, a different story. We saw single-digit increases of asking prices and also not a lot of movement regarding housing supply. Same goes for new listings. Houses were actually selling faster in January 2019 compared to 2018, and also houses selling for about 7 days faster in January 27th, 2018 compared to 2017. The big difference, though, in my opinion, is this right here, because look at 2019 and 2018. Not a lot of difference regarding the number of reduced price listings, whereas this year absolutely skyrocketing, up 157.2% compared to 2022. All right, I know that was a lot of information to go over in today's video, so here's a summary for you guys. So inventory has been rising for 18 out of the last 20 weeks on a year-over-year basis, and inventory increased 71% last week. This growth rate is very much significant though, because we've been seeing fewer new listings compared to last year for 30 consecutive weeks. However, though, as I described, we saw a decrease of housing supply ever since really November last year. And because the number of houses for sale have been more or less decreasing ever since November last year, we're currently at the lowest levels since late June of 2022. Also, the gap between 2022 and this year for new listings has been shrinking, but has decreased by single digits for the past 4 weeks in a row. In contrast, new listings were more or less decreasing by double digits from October through the end of November last year. And number 2, mortgage rates have been decreasing more or less ever since the beginning of this year. We started the year at approximately 6.5% for the average 30-year fix for people with exceptional credit, according to the Mortgage News Daily. And as of right now, which is February 2nd at the time of this video, rates are averaging around 6% right now. And number 3, we saw a huge increase in the number of reduced price listings over the past few months. We also saw triple-digit increases on a year-over-year basis in 11 out of the last 13 weeks. On top of that, the share of price reductions has been more or less on a downward trend since mid-November last year. And number 4, houses are taking longer to sell compared to the same week 1 year ago for 27 consecutive weeks. Again, though, a friendly reminder, this is based on closed home sales. Therefore, days on the market is a lagging indication or a lagging indicator of our housing market. So what are some potential huge changes ahead, given the fact that mortgage rates have been more or less above 6% ever since October 1st? Number 1, average rates are around 2.3 percentage points higher right now compared to the same time frame 12 months ago. This causes a 23% decrease in buyers' purchasing power. And number 2, housing affordability is still an issue in the US right now. It has been improving though because we've been seeing decreases in home prices plus interest rates. So for example, buyers looking to buy an average price home today versus the end of October and early November last year are going to save around $200 to $230 per month because home prices and of course mortgage rates have been decreasing. And again, rates have decreased from about 7.3% as of the end of October, and now rates are hovering around 6%. And number 3, the National Association of Realtors reported a small increase of 2.5% in pending home sales in December. This could translate into more closed home sales in the next 1 to 2 months. But home sales should remain relatively subdued though, given the fact we still have very low levels of pending home sales. In other words, this is not going to be a repeat of the craziness we had over the past couple of years. Additionally, we need more data, especially during the spring months, to see what direction our housing market's headed. And of course, I'll definitely keep you posted. And number 4, to combat inflation, the Fed raised rates by 25 basis points on February 1st this year. This, of course, increases interest rates for HELOCs or home equity line of credits, credit cards, and new auto loans. But of course, saving rates increase when the Fed increases rates as well. So for example, Ally Bank, for example, is paying approximately 3.4% for an online savings account right now. We're also starting to see inflation slow down. So rate hikes this year are going to be much lower than the rate hikes we saw back in 2022. Which, by the way, the street is expecting another 25 basis point rate hike on March 22nd this year. In comparison, the Fed raised the federal funds rate by 75 basis points 4 times in 2022. And of course, how much the Fed decides to raise rates in the future will depend on incoming inflation data. And number 5, rates were at or above 7% for the vast majority of October last year. We saw the true effects regarding these high rates in November and December's stats. We saw huge declines of home sales, pending home sales, along with price declines, down about 10% ever since June last year. The big question though is that because rates right now have been hovering around 6%, how will home buyer react to these rates at 6%, given the fact they were approximately at 7.4% back in October and November last year? And number 6, we're starting to see some very early signs that home buying activity is increasing. So for example, according to the MBA, mortgage applications for home loans have been increasing for 2 out of the last 3 weeks. We did see a big decrease last week, down 10%, but still up 2 out of the last 3 weeks. And also on top of that, this is not going to be a repeat of 2021 or 2022 because applications for home loans are still down approximately 40% compared to the same week in 2022. Yet another sign that home buying activity may be increasing is we saw a slight increase of contracts being signed between builders and home buyers in December. And in fact, we did see a slight increase in November last year as well regarding new home sales, which of course is when a home builder has an accepted offer from a home buyer, a contract is being signed. We're also seeing some very early signs that pending home sales have been increasing as well, but still well below last year's levels. Again, some very early signs, so we need more data. And lastly, number 7, subscribing is absolutely for free. And these videos, even though this is my favorite video, this video takes me hours to make. So I hope you guys got some value out of this video at least. And of course, if you did, then please hit the like button and appreciate that. Of course, I appreciate you. Hope you guys have an awesome day and I look forward to seeing you on the next video.